What is good, Tesla family? It's Ray J back with another video. And in this one, I want to break down what's going on with Tesla, SPY, Nvidia, the QQQ, and a couple of other tickers. And break down what's happening to the overall market right now, as we have some very important data coming out for tomorrow, which is going to cause some high volatility, in my opinion. I'm also going to break down what the news is saying about Tesla and what's going on with additional pieces of data that could affect Tesla for tomorrow. But before I break anything down about all this information, before I get into any more details, let me just mention a couple of things. I am firstly not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you are guaranteed up to 5 free stocks. The offer ends in just 5 days, so check it out before they run out. Anyways, let's break down what's going on with the market and Tesla. So, as a very important reminder, guys, I'm going to be talking about the charts very, very soon. I'm going to be starting off with like Aapl, SPY, and the QQQ because I need to give you guys some very important context about the markets before I talk about Tesla. And before I talk about any of these charts whatsoever, I'm going to be talking about some data that's coming out that's super, super important for the market first. And then we will get on with Tesla stock a little bit later. So, first, I just wanted to mention that tomorrow we have Richardson Electronics announcing earnings. That's pretty much it for tomorrow. And then Thursday and Friday will be a lot more important, especially Friday, as we have the big banks' earnings. But besides that, we have some very, very important data coming out for tomorrow. I told you guys about this in my second video. I gave you guys a warning about this, and you guys had the choice to be holding your positions overnight or not. It was all depending on what you wanted, but it could have been quite risky because it depends on PPI for the way the market opens tomorrow and factors like that. But, anyways, let's talk about the data. What is so big about tomorrow? So, first and foremost, 1 hour before the market opens, we have the PPI report coming out. This is a leading indicator for CPI, and this tends to cause big volatility, and it does affect the Fed's policies to some extent. Now, core PPI is going to be the most important for the Fed, and it's very important to remember that there have been some risks of inflation going up. So, if this does show an increase, this would tell us that there's possibly going to be another increase in CPI for October if this is hot. So, what are we expecting? So, for tomorrow, watch for core PPI year over year to be between 2.2 and 2.3%. If it's hotter than that range, that could cause the market to slow down a bit. If it's as expected, the market could still hold up most likely. And then PPI year over year is also coming out. We want this to be 1.6 to 1.7% between there. If it's hotter than that, that could cause the market to slow down. If not, watch for it to meet expectations and help the market. This is all coming out 1 hour before the market opens, so make sure you're prepared for this. It's going to be coming out before market open. I will talk about this in the morning. Then after all this data comes out, which could affect the Fed's policies, it's going to affect, how we see the markets, consumer sentiment, and things like that. All this data is going to be coming out. And then we're going to be having a couple of Fed speakers, which is not that significant. It's just Waller and Bostic speaking. They're not going to move the market that much, in my opinion. But then we have another major piece of data later on tomorrow. We have the FOMC minutes at 2 o'clock p.m. Eastern Time. Now, why is this so important? It's not an FOMC meeting, it's just the minutes report, which tends to be just a summary that gives us more insights about what the Fed speakers want to do, the Fed officials want to do about monetary policy. So this could cause a very, very big move if we see more and more Fed officials being hawkish. So expect some high volatility at this time at 2 o'clock p.m. It's going to cause a very big move for the market from that point on into close. So make sure you're prepared for this. This is going to move Tesla big time. Make sure you're prepared for everything. And we're going to be talking about something else now. So for Tesla, the base cars are now cheaper than the average new cars in the US, according to this report. That depends on which car you're getting and also depends on whether or not you qualify for like EV tax credits and factors like that. But for now, this is once again like good for many, many investors, many, many buyers out there who are interested in buying a Tesla. And I think Teslas are just incredible, incredible cars with so many advancements. And getting deals like this is just it's absolutely incredible. Not all Teslas are this cheap, but with all these price cuts and factors like this coming out, this has benefited them to some extent, getting more demand. But what does, raise some alarms would be the fact that some margins may not be the best for Tesla on some of these vehicles. So I would be very careful in looking at this. We're starting to see the differential between the Model 3 and Model Y going up too. So with these major, major things coming out, I would say that for now, the average car price of the US is not really something that could be, looked at perfectly, but if you do look at it that way, you could argue that Teslas are becoming a lot more affordable thanks to these price cuts and these like new tax credits. So that's good for them. Also, rebates could help out many consumers. So that is good for Tesla to some extent. Hopefully, that helps bring up more demand. Now, I also want to mention that starting to see some price cuts on Tesla. Jefferies has cut their prices a bit because they think that Tesla may be losing the EV lead. Besides that news, volume was a little bit above average at 122 million, which is a good sign for Tesla for now. And the short volume has been dropping just a little bit. We will see if this increases or not. Now, despite that, I just wanted to mention that Wells Fargo has an equal weight rating for Tesla. I don't think this is updated yet, but we may see Jefferies announce the fact that they have a price cut on Tesla. They may have given it a different rating too. So we'll see if that updates. Price biz ratio is very flat. Tesla's performing quite equally with the markets. When it comes to daily seasonality, we tend to be green a little bit less on Wednesdays/Thursdays. We're only green about 48% of the time. So we tend to be a little bit weaker during this period. And finally, historically, you guys can see that the short interest has been going up a little bit on Tesla. More shorting is continuing to go on, which could lead to possible downside if it keeps going up. So be very careful when it comes to this. But there is one thing I just want to warn everyone about, and that's going to be Apple spying the QQQ before I talk about Tesla. So for Apple, I just wanted to mention we have a rising wedge that's forming. It's very clean, very beautiful, very nice looking setup. It all depends on PPI and also the FOMC minutes. Now, if we get a bounce, we could see this thing try to make its way back up towards this like 179.5 to 180 area before rejecting. And if we end up breaking below this trend line right here, this trend line ends up breaking, we could see Apple start sinking towards 177.5, if not 176.5. I warned you guys about this as well in my second video of the day, that this is something worth mentioning. And so far, this rising wedge is holding us up, but we're going to see if this ends up leading to more downside tomorrow. So just be very careful. If we're bullish, you want to see it hold above this and try to break towards 180. If you're bearish, you want to see it break below 177.5 to 176.5. Now I'm going to talk about SPY, QQQ before I talk about Tesla. For SPY, the exact same thing is almost developing. We have another rising wedge forming. If SPY breaks below, in my opinion, very close to this like 433 area, if we break below this thing could start sinking towards the lower 430s. 431 could be retested in 430 if we get that break tomorrow, depending on PPI and the FOMC minutes. If we get a bounce, we could see this thing try to push right back up towards 436.5 and potentially 438. Now, I just wanted to mention that the charts are favoring the bears a little bit more because we have a bearish setup and we ended up coming back down to where this support line is. So just be very careful. I'm not saying we have to break down yet. I'm not promising it. We need to see the breakdown for confirmation. We need to see us break below this trend line just to be safe. But I just want to warn you that the risk of downside is starting to go up because of this formation and because of this setup as algos are going to start to adjust. That's just my warning for everyone. It's not just Apple and SPY, but also the QQQ has the same thing developing. There's a potential rising wedge developing on it as well. If we're bullish, we want to see it break and hold 370. We could make our way back up to like 372 if that's the case. If we're bearish, we want to see it break below this trend line and start sinking towards, or I would say below this like 367.5 area. If it breaks below that, I could see it coming down to 366. And if that fails us, it could come all the way down to like 364 all over again. There is a risk of downside. There's a higher risk of downside eventually on the QQQ because of the rising wedge. We could either pop and then end up dropping down to these lower levels, or we just break down from here. It's got to be one of those two most likely based off this setup alone. Okay. That's just based off this setup. I can't promise anything with PPI and etc. It's just based off that setup. Now, what about Tesla? How is Tesla looking? Honestly, guys, Tesla has been trying to hold up. It was holding up quite decently, started to cool off just a little bit, but overall, it's still holding up nicely. But if Tesla breaks below 262.5, there's a risk of 260 coming again. And if we get below 260, we could see Tesla sinking towards the mid 250s, in my opinion. If we want to be bullish, you want to see it break and hold at 268. If that's the case, then it could go up to 260. But the thing about Tesla would be this. I'm going to switch over to Weeple for a second because we have a bearish divergence on the MACD and the RSI developing on Tesla. Now, the key word here is developing. It is not fully developed yet as we're not seeing this thing playing out for now. If Tesla ends up breaking below these support zones, 262 and like 260, then it could play out. We could see Tesla sink. If Tesla manages to hold above like 265 and then it gets above like 266, breaks 268, we could turn bullish. I'm in the middle for now, but this rising wedge right here is suggesting two possibilities. Number one, we could get one more pop to form a triple bearish divergence and then start sinking. or we could just start sinking from here. Those are the two main possibilities. So I want everyone to just be watching this very, very carefully. We will see which one ends up playing out because it depends on the data, which is why I can't really make any promises. But what I can tell you is that there is a higher risk of downside looking at the setup and looking at how SPY, the QQQ and Apple are all looking simultaneously. The reason for that is because the algos tend to move very similarly amongst Tesla, SPY, and all these different tickers if you watch them on a daily basis. That's why it's very important to see that there is potential downside. For Nvidia, I just wanted to mention that, hold on, NVIDIA has something very similar developing on it. There's a possible rising wedge like pattern. It's not as clean, but it is technically still there. So if NVIDIA breaks below this support at 455, very close to this 455 area, it could come all the way down to 451. And if that fails us, we're going to be watching this support right here, this historical support for NVIDIA, which would take us all the way down to this 447 area, very close to that. But for now, we're going to be watching this support, which is more important, this 455 area. We need to hold this, or else the downside is possible. If we try to push up, watch this resistance around the very low 460s, so like 461, 463, around there. If it manages to break above this and invalidate this, then 465 is technically possible, but this setup is looking a bit more bearish to me because of how the whole market is looking in unison. So watch for the little pop, possibly to like 460 area, then a rejection. And if we end up breaking below this trend line right here, this one like right here, then that could lead to downside and a break to the downside. So watch that very, very carefully. Anyways, that's pretty much it for trading view. I'm now going to switch over to like smaller charts just to be a lot quicker for other tickers. For Microsoft, we have a 4-hour potential bearish cross in the PPO. So the odds favor this thing either forming kind of like a head and shoulders right here and then starting to sink down towards this 200 EMA at 325. The odds do favor downside, but watch 330 to see if we can break it or not. If we break 330, we could try to turn bullish, but this looks like it's going to retest 325 very soon. For AMD, remember guys, we called out 109 on AMD, and that is where this thing ended up going to. We had a nice inverse head and shoulders setup, but we're at some key resistance between 110 and 112. Look for a potential rejection here. We also have a rising wedge forming. If it rejects off 110, if not 112, we could see it start sinking towards 106 again. So either a little more of a pop than drop, or just drops from here back to 106 then 105. For something else such as the VIX, I just wanted to mention that the VIX had this head and shoulders. It has come down, but now we're at support at the 50 EMA and the 200 EMA as well. So we'll see if we bounce or not off the 50. So be very careful right here. The VIX is close to its support. The dollar is also getting very close to support. It's at 105.6. It actually bounced off 105.6 in the past to push up to about 107. We also just so happen to have a bullish divergence on the dollar that's developing on the RSI that could lead to a bounce towards 106 plus. So watch it very carefully and see if the dollar bounces. If it gets that bounce, that could be a bearish catalyst for the market. On top of this, Coinbase, we were talking about this thing breaking 80. That's what happened. Is there a possible cup and handle? Yes, but I'd be very careful because there's a bearish divergence developing. With this divergence, there's a risk of it coming down to 77.5, if not 76. We're going to be watching this 80 area. If we break above 80 and hold it, we're bullish. If we break below it and we end up like continuing to sink below these levels, then 177.5 and 176 is what's more probable. For Google, looking a bit more bearish on the 4-hour time frame, I could see it sinking towards 137.97, then 136. We also have a bearish divergence, so the odds do favor it coming down. To turn bullish, you want to see it break 140, but we have some strong resistance there, which I talked about yesterday, looking a bit more bearish. For the 10-year Treasury yield, this thing has come down a bit. It's actually trying to base at 46, and we just have to see if this thing will come down to fill this gap and then bounce or not, but it's just a matter of like we'll have to wait and see. We're also at gap support right now, so we will see if this thing bounces or not. It basically came down to 46 is trying to hold support, but not looking too decisive yet. So we'll see what happens tomorrow. For Amazon, it's actually looking quite decent. It's not looking as weak as the market. There's a possible rising wedge, but we'll see what happens. If Amazon breaks below 128, there's a risk of it coming down towards 127.5 and 126. If it keeps going, then 130 plus is a possibility. So we're going to be watching that very carefully. For Meta, this also is trying to push, but we also have a rising wedge-like pattern. If we break below 320, watch it come all the way down to 318. And if that fails us, then 314 is on the table. If it keeps breaking out, watch 325 as resistance, then 327.5 is a possibility. If it breaks that, but the odds do favor the downside for Meta looking at this rising wedge. All right, guys. So For the market, especially for Tesla, there's a risk of downside coming. Does it have to be tomorrow specifically? I can't promise that as it depends on the data. So we'll just have to wait and see for now. But just know that there's a risk of downside coming very soon. And if Tesla does retrace, watch the support levels I called out very, very early on. All right, so that's it for this video. Thank you for listening. Have a great day. And I'll see you guys tomorrow morning for the next video and the reports on PPI. Thank you so much for listening, guys. Thank you all so much. I appreciate everyone out there. Have a great day and peace out.